What is going on, ladies and gentlemen? So, we got some Polestar earnings on the block today. Even after that, you also have PCE coming out. So today's going to be a crazy roller coaster. So we just have to sit tight, enjoy the ride. I've been refreshing. There's been no deck. The only thing that came out was a 6K so far, and that was just showing this. So essentially that joint ventureship that they created in June of 2023 is finally doing something. It looks like they're entered into a subscription agreement worth about 208 million. It looks like Polestar is kind of reducing some of their share to about 37%. So yeah, I don't really like I think this is kind of in the gray. They'll hopefully talk on this during the earnings today. The only thing we knew was just this, and it was very vague. It just said that it was going to be helping to build a operating system for Polestar, for the vehicle sold out of China, of course. So there wasn't really much context about this. So clearly something is happening behind the scenes based on this 6K, but no actual earnings right now. A lot of people seem to be saying that it was pushed back. I have no idea how they see that. Going under Polestar's website, it does show that it's still on. So we'll find out in 3 minutes because I'm listening to hold music right now. But yeah, I guess we'll find out in 3 minutes if it's actually on or not. But it seemed a little bit weird because their PR, which mind you was very good yesterday, it did not allude to them pushing back their earnings at all. So yeah. So yeah, we'll just have to sit tight. There has been a lot of activity after pre-market though. So it's been kind of went flat. Now it's up 2.73%. It's a very interesting stock. And actually, I bought in yesterday. It's been a while since I've held Polestar. I've covered it because I really do like it. Technicals did always point towards it continuing to go down despite a lot of the good operational updates, but I decided to buy in yesterday, largely because of that news. Fender, I completely agree. And Ernie, appreciate you joining. You're always welcome on these live streams. If you want to branch out, cover some other EVs, Polestar definitely has a lot of things going on. But yeah, I've been refreshing absolutely nothing so far. Hopefully they actually have the earnings. I feel like that would be, whenever a company just abnormally pushes it back, especially last minute, that's not a good sign. But definitely some key things to watch for is their guidance for 2024. In my opinion, well, they've also cited in the past profitability, so you'll want to watch just to see how that is going, transitioning into the States. That's been one struggling thing. And the data that's been coming out from Europe hasn't been the best either. So you'll want to watch all of those kind of talking points. Okay, so technically it's on, or like it should be starting now. If I remember Polestar, I don't know why, they are very suspenseful. I think they let us wait 5 minutes last time. So we'll just, yeah, you're right in the comments. Nothing better to do. Although, looking at futures right now, slightly red. Last minute jitters going into PCE. I don't know why. I seem to be one of the only individuals that thinks that PCE numbers coming out might get a hall pass from the market, because what happened with CPI when it came out, you had a significant sell-off, and then analysts started to say, oh, it's on. Okay.
Good day, and thank you for standing by. Welcome to the Polestar Business and Outlook Update conference call. At this time, all participants are in listen-only mode. After the speaker's presentation, there will be the question and answer session. To ask a question during the session, you need to press *11 on your telephone keypad. You will then hear an automatic message advising your hand is raised. To withdraw a question, please press *11 again. Please be advised that today's conference is being recorded. I would now like to hand the conference over to our first speaker today, Bojana Flint. Please go ahead.
Hello everyone, I'm Bojana Flint from Polestar Investor Relations. Thank you for joining Polestar's Business and Outlook Update call. Joining me today are Thomas Ingenlath, our CEO, and 𝗪𝗓𝗪, our CFO. Before handing over the call to Thomas, I would like to remind participants that some of our comments today will be considered forward-looking statements under U.S. federal securities laws and are subject to numerous risks and uncertainties that may cause Polestar's actual results to differ materially from what we have been communicated. These forward-looking statements include, but are not limited to, statements regarding the future financial performance of the company, production and delivery volumes, near-term outlook and medium-term targets, fundraising and funding requirements, macroeconomic and industry trends, company initiatives, and other future events. Forward-looking statements made today are effective only as of today, and Polestar undertakes no obligation to update any of its forward-looking statements. For a discussion of some of the factors that could cause our actual results to differ, please review the risk factors contained in our SEC filings. As Polestar is adjusting the release date for the 2023 preliminary unaudited financial and operational results to a later date, in order to complete the first full year of compliance required by the Sarbanes-Oxley Act of 2002, we won't be in a position to discuss the matters pertaining to those results today. With that, I'd like to turn the call over to Thomas. Please go ahead.
Yeah, thank you, Bojana. Good morning, everybody. Good afternoon. Thank you for joining our call today. And as Bojana mentioned, I'm sitting here together with 𝗪𝗓𝗪, who joined our company in January as the new CFO. I know probably some of you have met before, but of course this is our first analyst and investor call together. And yeah, I'm delighted to have you here with us, Per, and of course happy for you to have joined us. Please, if you could do a brief introduction of yourself.
Yeah, thank you very much, Thomas, and good morning and good afternoon to everyone here. When Thomas approached me not so long time ago, I was very happy and excited to get the question. I have been following Polestar quite a long time, and I think Polestar is a very interesting and great brand, and I definitely believe in Polestar's future. I have close to 30 years in the automotive industry, in Volvo Cars, Ford Motor Company, and also in Geely. With that experience, I think I can add quite a lot to the Polestar business, and I also seen, of course, Polestar from those angles quite a lot. So I'm very well aware of what we are doing here and what the future looks like. I know quite a lot of the people in the team here, so I'm happy to work with Thomas and his team, and I will also look forward to interacting with you going forward here. And by that, let me hand back over to Thomas.
Yeah, thanks, Per. Yesterday, we have made announcements that are very important for the future of Polestar. And I will start here today with the funding part. Now, as you know, since we presented in November the strengthened business plan, we have been very clear that we will require $1.3 billion in additional external funding to reach that cash flow break-even moment in 2025. These were the two really main important anchor points of this announcement. And we always said that, yes, we are actually making good progress when it comes to this external funding. And of course, you can imagine, very happy now that yesterday we could announce the secured syndicate of leading global banks that comes together to approximately $1 billion through a three-year loan facility. And that represents, of course, a very strong statement of confidence in Polestar and in our future. Now, with this majority of the required funding secured, we will now focus on delivering on the business plan, including the cash flow break-even and second important part, the high teens gross margins in 2025. Alongside the funding, we set out other key actions within the plan, and I want to update you on our progress on those. We will benefit from a richer product mix, obviously, with the two SUVs coming in with high margins. And Polestar 4 sales are accelerating around the world. Polestar 3 is now in production in Chengdu. And on both cars, we will offer greater personalization for the customers, increased packs and options. And with that, of course, that will lead as well to higher margins in this premium luxury segment. It doesn't stop here. We have the Polestar 5 that will be in production next year. And the prototype manufacturing is accelerating over the course of 2024, leading to the start of production in 2025. The expansion of our manufacturing footprint is on track. We have hit important production milestones for both the Polestar 3 in South Carolina, US, and for the Polestar 4 in Busan, South Korea. Both developments, they are, of course, very important steps for us to create that more diversified and de-risked manufacturing footprint, which will, on one hand, improve profitability in some of our core markets, such as US, but as well, as I said, de-risk our company, Polestar. Marketing, distribution, we're making good progress. We have advancing efforts in optimizing our sales footprint to improve the profitability as we scale, of course, now with the cars in our portfolio, scaling the business now significantly. This work is led by Christian 𝗪𝗪𝗧, who is our new head of sales, joined as well earlier this year together with Per. And he has made already in a very short time lots of progress. For example, in Europe, where we are shifting some countries from a direct to an importer model, and in the US, where we are transitioning towards a wholesale model. Cost management, of course, remains a priority, and our efforts are delivering results. In summer last year, we announced our first round of cost optimization and a 10% headcount reduction. And now Per is driving the work here even further, and we recently announced an additional 15% headcount reduction. And of course, Per is always focused on the CapEx, working capital, inventory management, all in all to become leaner and more efficient as we continue to grow. Now, before we move to the outlook, let me say a couple of words about last week's announcement regarding the future ownership structure. First, foremost, of course, very pleased to have Geely Sweden now as a major shareholder. It's a more independent, a stronger Polestar, the position we are in now with having Geely in the ecosystem. And as Geely has stated, we will have, of course, stronger technological collaboration that has developed over the course of our product development very naturally over the last year. But they also confirmed, of course, the ongoing financial and operational commitment to Polestar, including future fundraising activities. We welcome new shareholders, both institutional and retail, and of course, we maintain our great relationships with Volvo Cars. Volvo Cars will retain 18% stake in Polestar, and on top of that, they have extended the shareholder loan by 18 months to the end of 2028, which is, of course, a clear sign of their continued trust and belief in our future. So let me hand over now again back to Per to give an update on the 24 outlook.
Yeah, thank you, Thomas. And as you heard, Thomas described a lot on our production and ramp up of Polestar 3 and Polestar 4. We have started production of Polestar 3 in China. Polestar 4 has also started production, and we are delivering that to our Chinese market. Of course, now with lead times and logistics, and also expanding to different markets of the world, we will see the global deliveries of those cars to commence in the summer here. And obviously, right now, we are fully focused on doing the final investment for those cars, building up the production capacity, and also launching activities to secure strong sales in the second half of the year. Of course, now you understand that this year will be basically two different characters. The first half of the year will predominantly be based on Polestar 2 sales, while the second half of the year will be completely different with the actions we have taken, both on the cost side, but of course, much more importantly so on the deliveries of the two high-margin SUVs. This combination will give a volume momentum and drive higher margins into the second half of the year. And as we guided yesterday in our release, by the end of this year, we expect the volume growth that supports the 2025 targets on the volumes, and we also expect a double-digit gross margin in the later part of this year. With that, let me hand back to Thomas for concluding remarks, and then we can go on to your questions.
Yeah, thanks, Per. So, Polestar 3 production has started. Preparations in the US plant, the second manufacturing footprint, are in full swing. Polestar 4 sales picking up rapidly. Customers are falling in love with the 4. And Polestar 5 final prototype series are being built this year in that purpose-built factory dedicated to this sports car aluminum bonded technology. We have secured funding, we announced yesterday, and 3 cars in production. So we're making really major progress this year towards cash flow break even in 25. Our model lineup positions Polestar as the performance car brand in the electric age. And with the news of yesterday, we look with great confidence into the future of our company. So with that, hand over to the operator for the Q&A session.
Thank you so much. Dear participants, as a reminder, if you wish to ask a question, please press star 11 on your telephone keypad and wait for your name to be announced. To withdraw a question, please press star 11 again. Please stand by, we'll compile the Q&A roster. This will take a few moments. And now we're going to take our first question. And it comes from the line of Tobias Bass from Redburn Atlantic. Your line is open. Please ask your question.
Thomas, Per, Bjarne, good afternoon, and thank you for taking my questions. Pages 87 through 91 of the facilities agreement disclosed on Form 6K yesterday outline the covenants on the new debt. Given volume declined sequentially in 4Q23, despite having the full effect of Polestar 2 refresh, and that retail sales in January appear to be weaker year on year, what gives you confidence that you're able to meet the minimum revenue threshold of $5.4 billion this year, which I estimate is equivalent to retail sales of about 100,000 units?
Yeah, this is Per. I can take that question. Obviously, when we closed the club loan here, which we have been very happy to get, we are of course aware of the covenants, and the covenants are built on the business plan that we presented late last year. That business plan took into account the somewhat more difficult BEV market. So this is completely in line with our expectations. So we don't see a problem from that perspective.
Okay, understood. On a pro forma basis, assuming all outstanding credit facilities are drawn, I calculate that Polestar can onboard about $1 billion of new debt without breaching the total indebtedness covenant. Is the plan now to raise incremental capital via equity and use the headroom for refinancing and resizing the short-term working capital facilities outstanding?
Yeah, as we said before when we presented our business plan late last year, we talked about getting more money into the company, a combination of loans and equity. Now we have almost $1 billion of loans. Obviously, we are looking into more equity. If you ask me as a CFO, would I be happy to have significantly more equity? Yes, I would like to have that. So we are preparing ourselves to fund more equity as soon as we think it's the right time to do that.
Talk here, Thomas here, about the right time. I mean, obviously, the order that this came now with the debt financing now and us progressing the company this year, the two SUVs coming to the business, really using now the system that we have installed in the sales organization in all the 23 countries. Of course, we feel that that year will be very important for Polestar to develop as a company, to actually prove the points that we have been always making about the advantage of an asset-light model, and that our company will, with the 3 models in our lineup, be in a much better position to actually portray that successful business model. And we are feeling much more confident that the equity round at that point in time will be a very good time to address this question.
All right, thanks. And just one last question. How does Polestar think about branding? If I have a look in China, for example, the new Polestar 4s wear Geely badging at the rear. Do you think this causes confusion?
Since it's not a badging, it's a principle that the car industry is very familiar with. We are sharing technology with Volvo. We are sharing technology with Geely. We are building our Polestar 3 on technology that we share together with EX90. I think the proof point of us building a very strong identity as a Scandinavian design brand with our very unique technology features, obviously always very customer-oriented technology that you can experience. And the Polestar 4 as a highlight, I mean, really introducing the virtual rear window with a much, much better rear view through the camera view than through the very limited view that you have through a rear window. These are unique features that, of course, make the brand shine. I'm certainly very much driving the strong brand expression of each and our cars, supporting that. And when you see how the Polestar 4 shines as a star in shows where people are very, very pleased about, or they would say that have very good comments about how the car looks, how the car puts together a very attractive offer to the customers. And I certainly think that especially the Polestar 4 does a great job for our brand in positioning and offer.
All right. Appreciate the answers. Thanks all.
Thank you. Now we're going to take our next question. Just give us a moment. And the next question comes to the line of Alex Potter from Piper Sandler. Your line is open. Please ask your question.
Perfect. Thanks very much. So maybe the first question is on the headcount reductions. I'd be interested in hearing, I guess, the job functions that you're going to be reducing headcount in. What had these folks been working on, and what operational sacrifices do you think you'll be making now that they will no longer be with the company?
A little bit twofold answer here. I mean, big times, this is a fairly general reduction in order to drive efficiencies. A company that has been growing that fast as Polestar, I think each and every company, of course, I mean, if you look into it, you have this potential to drive efficiencies. That is not an unknown tool. And as sad and as unfortunate this measurement is for the organization, having said that, and each and every individual having said that, it is not bad to once in a while actually squeeze this efficiencies and get this higher performance out of the company. Having said that, there are certain elements of the build-up phase within Polestar, which of course reached a certain degree of completion, and we are turning towards a different era in Polestar, and that is after building up all the tools and all the systems. We are, of course, now going into the phase we are using them, and of course, the strengthening of what it takes to sell the cars, to actually be out there in the market and drive profitable sales is what we concentrate on now. And for example, building up a digital system that supports this is, of course, rather in the completion phase. And of course, there you have probably a higher portion than the 15% of the headcount reduction that you can execute.
Okay, that actually is a good segue into my next question. You mentioned in your prepared remarks a focus on the sales channel. I think you mentioned something about going to a wholesale model in the United States. Can you elaborate a little bit on how your go-to-market strategy is changing or growing?
Yeah, I'd love to do that. To the US. In the very beginning, we took the decision to not go for the 100% direct sales model as we had it in the rest of the world in the US, because we just simply felt it would hinder us to go fast to market with all the lawsuits and whatever that would have been connected to pushing that through. So we indeed already had kind of a hybrid model, working with dealers that sell our cars in a more traditional wholesale way, but we implemented still and hold on to some direct sales principles that we had here in Europe. And we actually found that that is a very inefficient combination. And in the case where we have the dealers out there, we really embrace now that we use that to the full benefit of that wholesale model, and really don't try to make a mishmash, but to go for this very clear principle there. In the rest of the world, especially, of course, now here Europe, where we have our direct sales model, we see that the fairly theoretical idea of the beginning needs the evolvement, the evolution, that we actually enable a certain degree of higher autonomy within the space, less central steering, a bit more responsibility into the markets and into the individual spaces, just in order to drive performance. And we are very convinced that Christian will drive this into a very successful business model for us. So there's definitely a big plus to be gained working on this side.
Okay, excellent. Thanks. Maybe one last one, and maybe it's a slightly unfair question because Polestar 4 hasn't really been in the market for very long yet. But I know that you had mentioned Polestar 4 was going to be a major tool, especially in China. And obviously, it's being produced in China. So any of maybe the initial reaction, anything you can say about how Polestar 4 is being received specifically in the Chinese market? Thanks.
Yeah, the question is a bit early because, of course, it's at the moment in the phase where we see how journalists test drive results, give feedback for us. While for the sales, of course, this is still a bit too early to have a conclusion on that. We have from the test drives, from the feedback of all the journalists, all the opinion leaders there in China. And I say it now, it's surprising because this car gets a lot of credit for being actually a performance car, which we shouldn't be surprised about because that's what we are, a performance car brand. But obviously this was never before that much in the focus in China. And that they actually see now the actual great attribute and the performance of this car And what we made out of this technology in terms of being a performance car, I think it's a very, very good starting point. Why that second element, which we think will be very crucial as well, is not quite as dominant yet, and that is the Polestar OS, the software in the car, and its combination to the technology that we bring through the JV with 𝗪𝗠𝗪, the mobile phone company. I think it's as well very clear the mobile phone is in an event just in front of Beijing Motor Show in April, coming to launch. So that element is actually going to be deployed only in the very near future. So I think then this smart device aspect of the Polestar 4 having this full integration of its own phone will be much more tangible, and that experience is still to come. So we definitely see this market now building up. They have to do a lot of work in terms of building out the network. So the JV is very busy in launching the product, launching the phone, and of course investing and building into the sales network of Polestar in China. But Polestar 4, first reaction of journalists and people who drove the car, very positive.
Great. Thanks, everyone.
Thank you. Now we're going to take our next question. Just give us a moment. And the next question comes to the line of Winnie Dong from Deutsche Bank. Your line is open. Please ask your question.
Hi, thanks so much for taking my questions. I was wondering if you can specifically comment on the order pattern or the demand environment that you're seeing specifically for Polestar 2 for the year, given that a large quantity of volume for this year is going to be coming from that vehicle, and Polestar 3 and 4 in the second half. So I was wondering if you can maybe basically comment on the demand environment for that one.
Excuse me, we didn't understand here, nobody in the room, which pattern? We just couldn't hear it properly.
Winnie, is it the quarterly phasing? Is that what you were asking?
So just the demand environment for that vehicle and order trends for that vehicle.
Polestar 2.
Polestar 2.
No, right.
Polestar 2, yes.
Well, Polestar 2 is good. We have obviously now this year full year of the upgraded Polestar 2, and what we see is that it's equally working. On one hand, the long range that we achieved with the rear-wheel drive, very positive reception for that. But at the same time, and especially since we made this now a very competitive offer, kind of like, okay, either you take the range longest in the rear wheel, or you go for the higher performance in the four-wheel drive. That's something that is finding great interest. But I would love to emphasize as well one thing. Obviously, in 2023, our company, Polestar, was very dependent on that one car. And we were very much interested in selling a very high number of Polestar 2, which, of course, in a difficult environment and us being very careful about the margins, led us to a situation which was volume-wise, of course, always a bit tricky. That's totally different in 2024. We have a year, as Per explained, which is a bit split between the first half, where we're still a one-car company, second half, three cars. Obviously, with Polestar 3 and 4 joining over the course of this year, the volume proportion that the Polestar 2 has to take in our holistic sales is less than what the car had to perform in 2023. So that gives us, of course, a much greater chance to work with the car in a very favorable and good way. So we will see, as we said, a growth of volume in 2024, which is, I think, very nice differentiator to a lot of others. And of course, that is due to the fact that we invested in that this product portfolio is coming alive, and 3 and 4 join, and we can enjoy that kind of volume growth purely because we have now this 3 cars in our toolbox.
I think to add to that one, I think it's also very interesting to see that when we now launch the new cars, the interest for Polestar 2 also starts to pick up. We saw when we launched Polestar 4 here in Europe on our website and on our configurators, and people were putting in orders on Polestar 4. We definitely also saw more interest in the Polestar 2 with test drives and order picking up and so on. So we expect the Polestar 2 to benefit from the launch of the other cars because more people will just see that Polestar is a very nice brand.
Yeah. Thank you very much for that. And then my second question is on the gross margin directional guidance you have for the year, reaching double digits by the end of this year and then high teens in 2025. I guess first on the double digits toward the end of this year, I understand the coming on of the higher margin vehicles is going to help with that. Is there any other drivers maybe on the cost side that you can also explain to that helped you get there end of this year and then into next year? Thanks.
No, that's a good question. Obviously, SUVs generally have higher gross margins than other cars. So it's like that is one of the main driver. But we also worked quite a lot with how the revenue, how we package the cars into terms of options and packs, etc. So that will improve our revenue. We are also working very hard on the product cost, so that will also support. The other thing, which is also very important going into our sales and marketing strategies, like we are also then working very hard to really find what I call the right sales channels to really make sure that we sell cars where they are most profitable customers are existing. So all of these three things will add to it.
And the fourth thing,
margin. Fourth thing,
yes, totally. We should really put into that equation as well the start of production of Polestar 3 in Charleston. Let's face it, being in the US, producing for the US, of course, gives the Polestar 3 as well a complete different base when it comes to duties and stuff. Yeah. That of course is a good factor.
Thank you very much.
Thank you. Dear participants, as a reminder, if you wish to ask a question, please press star 11 on your telephone keypad. Now we're going to take our next question. And the next question comes from the line of 𝗖𝗢𝗡𝗘𝗖𝗧 from Citi. Your line is open. Please ask your question.
Great. Thank you. Hi, everyone. Just actually want to follow up on the gross margin question. I was hoping you could maybe provide a little bit more detail on kind of what you're assuming for kind of general EV pricing by the end of the year versus now, as well as roughly what kind of sales mix you're assuming across the portfolio, percent of Polestar 3 and Polestar 4 perhaps, as well as roughly if you can share any kind of high-level thoughts on the regional mix kind of that you're assuming to get there.
I can start a little bit on that one. Obviously, we talked about Polestar 2. They are kind of like being there on similar levels through the year. And then we add on the Polestar 3 and Polestar 4. So they have, of course, significantly higher mixes. So that will definitely help. And yeah, I would say that, of course, if you have same level of Polestar 2s, you will see that the increased volumes then will basically be done on the Polestar 3 and Polestar 4s, obviously. From a regional mix, we see that we don't